Joining us today is Adam Plummer, Fraud Manager of Zurich Financial Services Australia Limited, who will be speaking at the 12th Annual Fraud Summit 2011 to be held on the 27th and 28th of June in Sydney. Welcome, Adam.
Thank you, Phil.
In your opinion, what are the top three categories of insurance fraud within the insurance sector?
Look, I would say what I've seen over the last 20 odd years of doing this work is the main category of insurance fraud would be policyholder fraud. That is where our customers who pay a contract of insurance commit fraud against the insurance industry through the lodgement of a claim. The other category I would see would be premium fraud. That would start at the new business stage where the policyholder takes out a policy of insurance and may provide false and misleading information in order to reduce the premium. And that could also be then a vehicle for fraud at a claim stage as well. The other category I would see would be probably cross-insurer fraud, and what I mean by that is where we see gangs, or not so much gangs, but groups of policyholders, organised or not organised, committing insurance fraud across multiple insurers.
As the leader of Zurich's anti-fraud team, what measures are taken to ensure zero tolerance towards fraud?
The insurance industry has had a zero tolerance to fraud for many years. I now work for Zurich Insurance and have been for the last 18 months. Zurich has adopted a zero tolerance to fraud policy since the beginning of last year when I came on board. Zurich Home Office in Switzerland put together a program, an anti-fraud program, which was then rolled out globally, and Australia has embraced that program, and I'm now managing and leading that program. The measures we're taking is by having an internal fraud unit within the claims area of Zurich and building industry standard processes and procedures to tackle fraud and detect it and prosecute it if need be.
Prevention is the best way to manage fraud, and $1 invested on prevention now will save $100 on detection later, according to Peter Roebuck, accounting professor at the Australian School of Business, University of New South Wales. What's your view on this?
Yes, I agree with Peter's sentiments in this regard that prevention is better than cure. My experience over the last 20 odd years doing this work is that the industry standard is generally about 1 in 3. Can be higher, about 1 in 5. But essentially what I mean by that is that for every $1 that we spend on investigation of a claim, generally returns to us about $3 to $5 in fraud savings.
You're speaking at the 12th Annual Fraud Summit to be held on the 27th and 28th of June in Sydney. What are some of the key areas that you'll be addressing in your presentation?
Look, I'll be talking about insurance fraud generally within the insurance industry. I'll be talking about some statistics that I have seen and been across for the last 20 odd years. The link between insurance fraud and the GFC. The global financial crisis was certainly a vehicle that caused Zurich to look more of its risk management strategies. The essential role of whistleblowers and informants that play a critical part in detecting and prosecuting insurance fraud. What are some of the major risk management strategies in developing insurance fraud, and also what are some of the data analytics capabilities that insurance industry has at the moment, and some of the exciting things that Zurich's looking at in the future.
Thanks for joining us today, Adam, and we look forward to your presentation at the summit.
Thanks very much, Phil.